Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and it is the 8th of March. What we're going to talk about today are the charts that we are watching for the new trading week, potential long trades, and a potential short trade of the small caps. We'll talk about the TZA and a whole bunch of other charts as well in a moment. But before we go to the charts, I want to talk about tonight, Sunday night, 6 p.m. Eastern Standard Time. We are going live. We're going to be discussing the futures action as well as taking a look at the headlines, and we'll be talking about in greater detail the symbols that I discussed today on Best Stock Charts that come up for conversation this evening, and also any symbols that our members have for me to review on video. We'll do that live tonight, 6 p.m. Eastern Standard Time. Please join us. There's a link below in the video description area where you can enter your email address to get an alert 15 minutes prior to us going live. So enter your email address. We hate spam too. You'll not be spammed. Don't forget to subscribe to the channel. You get alerted as well vis-a-vis YouTube. And if I could ask you to like this video so we can get more eyeballs watching our videos promoted by YouTube, appreciating the value of our contrarian trading style. And lastly, the SMS text alerts for our trades is now functional, working, outstanding, good stuff. We tested it last week, worked perfectly. So join us, 14 days free. And now let's get to something that kind of peeved me before we go to the charts. This was from I'll link to it at the end of this commentary, how I responded to this gentleman. I'm going to pixelate his name so that way he doesn't get harassed. I'm going to make the assumption that he watched only one or two of my videos, and I don't want to have the guy demonized for no reason. But he made a comment on our Swing Trading Today commentary on Friday, and his comment said, "You said last week that the stock market may hit an all-time highs, LOL. Yeah, it may. If you have the Federal Reserve come out during an election year with a new round of, forget about QE4, QE5, 6, whatever you want to call it now, call it cupcakes. If you get enough liquidity out there, forcing people out of bonds and into stocks, and you have the Federal Reserve in and of itself now floating trial balloons of buying stocks, you may get, during this election year, new all-time highs in the stock market. I'm not predicting it. I predicted a sell-off. In fact, this is what I had to say on the 9th of February when I was interviewed by TrendSpider. Here, take a listen to what I had to say. But short term, I would say about for the next 6 to 8 weeks that I'm going to be bearish on the market. Unless, of course, we simply trade sideways. We alleviate this overbought condition that we're seeing with quite a bit extended on some of the really mega cap names. And I think that we're setting up for a nice pullback. I think that the markets at current are completely understating the impact of the coronavirus. Copper prices are rapidly decaying. They're at multi-year lows right now. And they just opened up. I just checked the futures a moment ago. They opened up lower. You have the Baltic Dry Sea Index, which is just completely in free fall. And you have the Federal Reserve. I mean, if you take a look at the performance of the market relative to the Federal Reserve's action of late, they're correlated. Were it not for the Federal Reserve, hopefully everybody can see this chart that I just brought up. Were it not for the Federal Reserve and their efforts, this market would be in some serious trouble right now because they're providing so much liquidity. And the question I would have for Jay Powell, who doesn't want to admit that we have a QE4 going on, is, if the economy is so great, why are you printing so much money? So we saw the month of January, which was down, and people have a tendency to forget quickly, and that's just human nature. But oddly enough, most of January, you saw money come out of the Federal Reserve's balance sheet, and the markets closed down on the month. So there's a real serious correlation between what the Federal Reserve is doing and what we're seeing in the marketplace. So at that point in time, folks, I was bearish on the market, and the market was heading to new all-time highs, and I was quote-unquote wrong for about 2 weeks. And then all of a sudden, we were made right really, really quick because we were shorting the market. We were shorting Amazon as well. And overnight, we saw the biggest drop from all-time highs in point terms in history. So please, if you're going to take something that I say, please put it into context, because if you're not a steady watcher of my commentary, I have been bearish for quite some time on this market. Bullish on gold, it's moving up higher. Bullish on the gold miners, they're moving up higher. Let's talk about how we did last week, and let's get away from negative comments from people that may not be familiar with my work as much as they should be. Okay, so how did we do last week? We opened up a short position of the 20-year bond, which is extremely overbought at current, and we are down on that position and by at least 11% at current. So we're not doing well there. That's a small opening position. I plan on adding more. We dipped our toe in the water, obviously a little bit too soon. We gapped down on Friday. I think that we're going to rally here. We're going to be looking to add more to this position as the TLT, which is the long ETF of the 20-year bond price, just goes parabolic. We have RSI 83.37. We are trading up and into the third standard deviation Bollinger Band. We're going to be adding more to this position, and we should make this a profitable trade over the course of the next several trading days. We will get a correction here on the bond market and a rally in yields in the next couple of days. What else did we own last week, and how did we do? We were long of silver. We were up over 13% last week on silver alone using the USLV. What else were we long of? Nugget. We were up over 39% on this trade alone last week. And we bought the dip. When nobody else wanted it, we stepped in. We said, there's something wrong here. They got this completely wrong, and we bought, and the shares ripped up higher. What else did we own, or we opened up a position in? Yang, it was down on the week. I said to members, listen, what I think is happening here is that after a breakout the prior week, we're doing a retest this week. We are going to open up a position using a stop loss right below this blue dotted line, because if we fail, if we break down below that support level, we want to get out. Sure enough, we rallied off the lows of the week, and we're up at least 3% on this trade already. And I think that we are going to go higher. YANG puts you short of China. So a very, very good week last week. The caveat being is that our short or opening position short of the bond market did not do well. That was a small opening position. We plan on adding more, and I think that that trade will eventually be a profitable one. So more to come, members, on the TBT. Let's get to the symbols that we're watching for the coming week, and I have a list of them. I'm going to scroll through these really quick, and if you're interested in them and you want me to go into greater detail on these symbols, join us tonight, 6 p.m. Eastern Standard Time. We'll be live. So you can talk, any of you, if you're not a member, if you want to talk about any of these symbols that we go over, you want us to do a deep dive, I'll do a deep dive. If you're a member and you have symbols that you are interested in and you want me to review it, I'll go over it for you. But of course, you do need to be a member. So again, 6 p.m. Eastern Standard Time. Click that link below, enter your email address, 15-minute alert before we go live. Let's get to it. TZA. This is a daily chart. I like the weekly chart better. We're a bit extended here on a daily basis. The TZA is the leveraged ETF, putting you 3 times short of the Russell 2000. Very volatile. We've had a nice run here. I think that we're probably going to get a pullback, and on that pullback, there may be an opportunity to get long of the TZA because we're expecting a continuation move lower on the small caps. So the daily chart is implying that we're probably going to see some weakness, as noted by this filled candlestick. The last time we saw one of these candlesticks was back here on the 28th. It implies indecision at resistance from back here. What happened the last time we saw this candlestick? We pulled back. Is it a guarantee we're going to get a pullback? No, it's just a probability. All right, the weekly chart is looking really good. We'll talk about that. If you're interested tonight, join us 6 p.m. Eastern Standard Time. The next chart up, Darden. The restaurant sector is getting hit. We're going to go over Darden. We're going to go over Eat. Darden Restaurants. RSI at current 15.80. You're not going to see this often. Rare. Am I saying that Darden is an investment for the long term at current? No, not necessarily. I think the market is under a lot of pressure, and in all probability, we're going to get a counter trend rally fairly soon. The question is, where is their historical support? That's what we're most interested in. We'll go over that tonight if you're interested, 6 p.m. Eastern Standard Time. I went over it with members yesterday on the week ahead commentary. That's posted on the members area. Members, go check that out. It's available to you. Now, on Friday, DRI did rally off the lows of the session. We did see resistance at, what was the high? 90.51. So that's natural resistance now. The market sent us a signal. The question is, where do we have historical support? Did we hit it on Friday and then we reversed? Maybe. We need to take a look at the weekly or monthly charts, and we'll be able to make a better determination. I like the higher low on Stokes. So the chart is looking interesting, especially with RSI 15.80. Another name, Eat, Brinker International. RSI barely makes it onto our screener, but this is an S&P 500 stock. Rarely do you see them with RSI down below 20. RSI 19.55. Very interesting. We gapped down on Friday, kind of like a spinning top formation. Is it a bottom? Maybe. We want to take a look at the weekly and monthly charts. If you're interested, join us tonight. Request it. We'll go over those charts, perhaps even an intraday chart. What I am curious in wondering as to whether or not we rally before the 50-day moving average crosses below the 200-day moving average. It's going to happen absent an act of God. So I think that in all probability, we will wait to enter a long trade here until we get this negative divergence, because history has shown us is that you get a rally in the shares, not that it's going to last, you get a counter trend rally in the shares of a stock, ETF, index, whatever, that you're trading, and then the resumption of the primary trend, which at current is down, will resume after we get a counter trend rally, much as what you had back here. Stokes still declining. So I think we could still see more downside here on Eat. The next chart up, Scorpio Bulkers. We've been talking about this one for weeks. It's had RSI well below 10. And just because RSI goes below 10 doesn't mean we're going to buy it. I said we need to wait for historical resistance to get hit. The problem is that RSI alleviated this oversold condition prior to us hitting historical support. Are we at historical support, which is really critical? Stick around. We'll go over tonight if you're interested. 6 p.m. Eastern Standard Time, and request it. We'll go over the historical charts. It's very interesting. I will say that. Tease for tonight. Our stochastics beginning to make higher lows here. Same deal with RSI. So while we're putting in a possible double bottom here, and we're still relatively weak, we're seeing signs of improvement on Scorpio Bulkers, at least on the indicators, and somewhat on price. GLOP, RSI 11.72. The problem here, there is no historical support below. And if you take a look at the price action on Wednesday, we found support at $4 per share. Then on Thursday, what was support at $4 per share became resistance. It then became resistance again on Friday. So $4 per share, we know at that level, the market was good enough to send us a signal on the charts that we know that there is a bunch or are a bunch of sellers at that price point. So we want to put as much distance between our entry point and that resistance level as possible. That way we have a minimal amount of risk with the maximum amount of upside potential. So GLOP looking interesting. The next chart up, Cassie Pharmaceuticals. I've been talking about this chart for weeks. It remains somewhat oversold. It's been alleviating that oversold condition. But this is what happens. This is why you can't just use RSI alone. You could trade sideways, you alleviate that oversold condition, and you could still see downward pressure on the shares. So extreme oversold trading is not as simple as it may seem. Are we at historical support levels? I got to be honest with you, I forget. So I need to take a look at the weekly or monthly chart. I do have it available, and if you're interested, join us tonight, and we'll review it on Sunday Night Futures Live, again, 6 p.m. Eastern Standard Time. So on Friday, a lot of topping action. We're trying to find a bottom here. Volume was high. What really matters is the historical support and where we're at relative to that historical support before I got involved with CASI. And I need to revisit the amount of short interest on the shares as well, because that's going to be our catalyst to send the shares higher. Is this an investment? No, definitely not. All it is a short-term swing trade. GASL. This is the Direxion natural gas related bull ETF. Not for the faint of heart, folks, but as a trading vehicle, outstanding. We have RSI 18.85 and declining. I think we're going lower here. At some point in time, they're going to do a reverse split, 4 for 1, 5 for 1, something like that. Big volume on Friday. So we're still seeing institutions distribute these shares. I will point out, it's yielding 3.8%. There is no historical support below. So if you're interested in me doing a deep dive into the intraday charts to see whether or not we have any intraday indication that we may be nearing a bottom, I'll go over tonight. So join us, please. So GASL on our watch list. This is going to rally soon, folks. I know it's ugly. There are a lot of ugly stocks out there, and we're looking at a lot of them right now, but they're oversold. Does it mean that they're investments? No. It just means that you're going to get a counter-trend rally. And in bear markets, and technically we haven't gone down 20% yet. We're not technically in a bear market, but I believe that we are in a bear market. And bear market rallies are ruthless. And you saw it last week. How many times you see 1,000-point swings in the market? So it's not me making it up. It's fact. Just take a look at the S&P 500 last week or the Dow Jones if you're looking for 1,000-point swings. It's very, 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 very volatile, this market. So GASL, expect a short-term swing trade to the upside fairly soon. And again, join us tonight, 6 p.m. Eastern Standard Time if you want me to do a deep dive. What else are we interested in? Another energy name, GUSH, another leveraged ETF. I love them. RSI 18.56. Everybody hates oil. That's why we love it. We gapped down on Friday. Guess what? We're going lower. That's okay. That's good. Nobody wants them. Think about it, folks. Back in February, in early February, nobody wanted to short the market. Everybody was bullish. I was saying short the market. Get ready. We're going down. Nobody's paying attention to the coronavirus. Now everybody's afraid. VIX is through the roof. You need to be looking for opportunities, and that's what we're doing here. We kept a nice amount of cash on the sidelines. We did very, very well with our gold mining trade, our silver trade, our short of YANG last week, or a long of YANG, our short of China. My apologies. So we're ready to take advantage of all the doom and gloom that's out there in the marketplace. We're still seeing big volume to the downside, and that's okay. We just don't want to get in front of these guys. These are institutions. We don't want to get run over like a Mack truck. So we'll wait for that down volume to drop off dramatically. What else are we looking at? Halliburton. You got to love it. Halliburton's sporting 5.5% yield. RSI 13.35. This is Halliburton. They're pricing as if it's going out of business. Look at this. These are institutions freaking out. They can't get out fast enough. A very strong probability of us being involved with this coming week. And this one here, this is one where I'm going to tuck it away because you're going to be, here's what's going to happen. You're going to see fund managers get starved for yield. Treasuries are paying nothing. Interest rates could quite very well go negative. Even though Jeff Gonlach says it's improbable, you know what? Who knows? Who knows what's going to happen? Right now, adjusted for inflation's yield on the 10-year Treasury yield is negative. You're not making anything. It's not a great investment. They're going to force people into stocks, and what's going to happen is they're going to buy the yielders. You need to start taking a look at the Halliburtons of the world. Other names out there. I'll go to other names in a moment. Let me just say, I don't want to go off on a tirade, which I normally do. I have more yielders coming up. What else is going to do well? We're looking at India. We're looking at Vietnam. I'm going to go to a chart of the Vietnam ETF in a moment. Why? Why are we interested in these names as they're getting annihilated? Why? Companies are going to leave China. There's far too much concentration of manufacturing in China. The coronavirus could end tomorrow, yet the Chinese are still going to feel the impact of the coronavirus because you've had SARS. That was 13 years ago. Now we're back again with something even larger. They have these wet markets over in China. They're just bastions for disease. And unless they ban them and get their act together, you're only going to see this again in the future. And you have an entire global community shut down because China is shut down. So this is not going to last. You're going to see companies move over into India. You're going to see, and they have an educated workforce. You have companies that are going to move into Vietnam. We'll go to that chart in a moment. Sticking with India, RSI, 15.60. Possible double bottom and a higher low on Stokes. We're seeing bottoming action on price. We already have the 50-day moving average crossed down below the 200-period moving average. I'm getting ready to begin nibbling on the shares. Do you want to go jumping in with both feet? No, we don't know if there's a bottom here yet. So more to come here in the future as we begin to build investments in emerging markets, because we want to get in on the ground floor of Vietnam, of India, as businesses rotate out of China. The VNM, the VanEck Vectors Vietnam ETF, getting killed. We had a bear market rally at the beginning of the month. That has since failed. Now we're going to probe for either a higher low, a double bottom retest, or we're going to break and we're going to make lower lows. And we're going to be looking to begin building a position. We haven't begun nibbling on these shares yet. RSI 26.15. Is there historical support below? I believe there is. And if you're interested, join us tonight and we'll go over the weekly and monthly charts. Another yielder, Carnival Cruise Lines. God forbid you think about buying a cruise line in this market environment. But folks, nobody wants them. And it's yielding over 7.33%, assuming that that yield is safe. And we're probably going lower. We have a price point in mind. I've already gone over this with members. And we will be looking to buy Carnival Cruise Line. I already have the predefined price point out there for members. So join us if you're interested in when we get long of Carnival. It's all about a foregone conclusion that we're getting long of Carnival. Down volume, still very heavy. Institutions, they don't want this on their books, and that's good for us. And with that, folks, that's it for best stock charts for this week. Again, please join us tonight, 6 p.m. Eastern Standard Time. If you're interested in these charts, please join us, and we'll talk about the stock market futures as well. And members, if you're out there and you want me to go over any symbols, throw them in the chat box, and I will go over them. Everybody have a profitable trading week if I don't get a chance to speak with you, and be well.